Hey, what's going on? Strat Soldier here for just a quick video, bonus video for the week. All right. If you don't know who I am the Strat Soldier, and I help people increase their income by creating winning positions in the stock market. And I do that by teaching a trading system called the Strat, so you can learn how to trade without losing your real life, your money, or your time. And before I get too far into it, check out thestratsoldier.com. All right, check out thestratsoldier.com. This is Cedric, and he took my execution course, and he says it answered all his questions to a T. All right, I used to work with Rob Smith directly. All right, and I teach the Strat exactly how he taught it. The execution course goes over the first universal truth, actionable signals. All right, get in there, learn it right. Learning the Strat on the street is dangerous. All right, I see a lot of people teaching or saying they're teachers of the Strat, and they're showing a lot of bogus stuff. All right, showing a lot of bogus things. For example, fair value gaps have nothing to do with the Strat, nothing. But people mix and match, and as long as they're honest about that, and they say they're honest about that, that's fine. That's fine. So one thing you saw me talking about, and I was talking about this week, I was talking about how the 4-hour bar is overemphasized. It is. It's highly overemphasized. Let's look at some charts. Let's get into it. This will only take about 5 minutes for me to get through this. Let's do it. All right. Now, the reason why, so here's our 4 major time frames: the month, the weekly, the daily, and the 60. And if you trade the Strat, you should have your charts set up just like this. All right. Now, I know you might have your time frames mixed around. Maybe you have the month over here, and the week, and the day, and the 60 up here. That's fine. I've seen it several different ways. I've seen Rob Smith even change it different ways. All right. But you definitely want to be looking at 4 different time frames. This shows us time frame continuity. All right. This also shows us actionable signals on other time frames, so we can trade combinations. All right. And you also need to be using that broadening formation. All right. I'm running into a lot of people that are talking about, I don't use the broadening formation. You need three you need three things to trade the Strat: actionable signals, time frame continuity, broadening formations. You need all 3, and that comes in that all of that comes together to combine to know whether this is a buy or a sell. Do we want to get in this or not? How much probability do we have on this? Who's more aggressive, the buyers or the sellers? All right. So let's go to SPY, S&P 500, and just because it's the easiest thing to go to, because everybody talks about it, everybody sees it. So with SPY, that's better. That's better. A little glitch in the matrix. So you guys need to remember, and if you're a new trader as well, remember that the S&P 500 has 500 stocks in this index. All right, it's like a big basket of stocks. There's 500 of them here. We use this to gauge what's happening in the market. All right, the entire market. There's a lot of sectors in here too. All right, you see me on the weekend shift, break this thing down by sectors. So I still have the month, the week, the daily, and the 60. The month, the week, the daily, and the 60. All right, these are our 4 major time frames. You need to be looking at 4 separate time frames. The 4-hour, let's go to the 4-hour. All right, the 4-hour bars, you only get 4 bars a day. You only get 2 bars a day. 2 bars a day. All right, here and here. That's it. 2 bars a day. I understand if people are getting into this. I talk to futures traders. I do talk to some Strat trade, people that trade equities and things like that. But definitely options traders. A lot of options traders like to use these 4-hour bars. I understand. You don't want to get in on something that's doing this, doing nothing, consolidating, all right, for the rest of the afternoon. And I know you want to be in something as it's, it's still good. All right, look at your 4 hours, still good. Why are you getting out? I understand that as well. Shooter goes from force below 671. Still good, still good, still good. I understand that. But again, not everybody needs to be looking at the 4 hour. All right, swing traders, you really don't need this. All right, you don't need the 4 hour. All right. So that's where I come in with the day traders. Day traders probably might want to look at the 4 hour. They might. So here's a simple setup that I came up with one of the traders I was working with in a coaching session. I do coaching sessions every Saturday, 1 hour before I do the weekend shift. All right. And it looks something like this. All right. So you want to go through the month, see what's going on in the month, okay? I'm going to clean all this other stuff up so we don't have everything here, okay? All right. So you want to look at something like this. You definitely want to look at the month, see what's happening on the month. We always start with the month, but as the week starts, you can just drop it down to the week, all right? And now you have your week, your day, your 4 hour, and your 60-minute. The 60-minute bar, the 1 hour bar shows what's happening right now. It always shows what's happening right now. Who's buying, who's selling. Remember, you only got 2 bars here for the day. That's not a lot. And honestly, it's about the same as, you might as well just look at the daily. You might as well. All right. The 60-minute bar is going to show you if they're still buying. Is it slowing down? Is it really aggressive? Do we have the long red and green bars, or is it starting to get all like this, trading sideways? This little stubby crap, trading sideways. Yeah, it looks real good up here, but what are they really doing? What are they really doing right now? And it's 60-minute. So I'm not talking about the, 15 minutes, the 5 minutes, the 2 minutes, the 1 minute. All right. These are 1 hour bars. It takes 2 hours for a 2-2 reversal to set up on a 1 hour bar. On a 1 hour time frame. For a 3-1-2 up or a 3-1-2 down, that takes 3 hours for that to set up. There's no way you can miss that. There's no way you can miss that if you're really watching the charts. There's no way. All right. So once you have established what's happening on the week, you can see, okay, do I have any actionable signals on the daily? You can look at your 4 hour and go, okay, do I have any hammer shooters inside bars that reconfirm what I'm seeing on the day and the week? All right. And then as the trade goes, if you take something on the 4 hour, you can monitor the 60-minute and manage your trade on the 60-minute. All right. Manage your trade on the 60-minute. We want all these time frames to reconfirm each other. Right now, you're looking at full time frame continuity to the upside. All right, from the week down, weekly, daily, 4 hour, 1 hour. All right, this is just, they're all green. I see, they're buying. All right, the buyers are more aggressive. There's no reason I need to be getting out of this. All right, I'm good. All right. We finally hit the top of this scenario 3. They bought them up, they sold them down. We know they could do that again. They took out the lows and then right back to the highs. The most important thing about this is if you take these 3 bars and push them all together in 1 bar, that's a scenario 3. All right. And it totally takes out this. These bars become an outside bar of this bar. All right. We know the outside bar phenomena exists and we use it to our advantage. All right. So you want all these time frames to reconfirm each other. We're on the daily chart, we're looking for actionable signals to reconfirm what we're seeing on the week. On the 4 hours, same thing. You're looking for the 4 hour to reconfirm what we're seeing on the day, that yes, they are buying. They are buying. And then the 1 hour, you're looking for it to reconfirm what you're seeing on the 4, the daily, and the weekly. Are they still buying? Are they still in this? All right. Once it gets here, like around 1:30, You're not going to see this slow down on this, on the 4 hour. You're not going to see that. You just see a green. Oh, it's still good. It's 2 up. It's green. It's got to be good. You're not seeing this, okay? This is a good place to push your stops up. If you got in way down here, this is a good place to push your stop up. All right? If you don't get stopped out, you can still hold it. You can hold it. All right? But you're using these 60s to gauge and see and manage your trades and see what's actually happening. You're not going to see all that on the 4 hour. You're just going to see, you know what I mean? Especially if all you're looking at is the 4 hour, you know? So hopefully you understand that. Hopefully that makes sense. Again, you're looking at 4 different time frames, and we're looking for all these time frames to reconfirm what we're seeing on the week. They're buying on the week. Dailies reconfirming the week. 4 hours reconfirming the day. 60 minute, as it keeps going green, it reconfirms what's happening on the 4 hour, okay? So if you take a trade on the 4 hour, using the 4 hour, you're going to use your 60 minute to gauge that and have a way to push your stops up to get out of a trade, okay? To get out of a trade. This whole situation right here, this ugly thing, let's see where that started. Where's my learning line? There it is. All right. Look at this. All right. What do you got? 2 up. Scenario 3 to the lows. All right. Scenario 3 to the lows. Let me put an arrow here on this 4 hour bar. Same thing here. All right. This opened up, went green for a little bit. It did go green for a little bit, but then came right back down really hard. All right. Came back down really hard. You would see this happening by looking at the 60 minute bar, the 1 hour bar. You would see this about to happen. What triggers it? What happens? What, you know? Scenario 3 causes this to go red, causes your 4 hour to go red, causes your day to go red. All right. And now, you know, causes, you know, that's red. It's red. All right. That happened on, let's see here, that week as well. Let's make sure we're on the right week. Yep, that happened on this week here. Full time frame continuity to the downside. All right. You would have saw this because this would have opened up green, opened up here, went green, and then went red. And you would have saw here on the 60 minute where that started. What's the reversal that caused the 4 hour to go red, the daily to go red? All right. I'd have to go back, but the week was probably already red. It's a great example right there. Okay. Managing your trades, looking at the other, you know, looking at 4 time frames, look at time frame continuity, looking at the broadening formation, looking for actionable signals. All right. Using the smaller time frames to manage your trades. So you can get stopped out with profit, or you can see something, you know, something silly about to happen. You're ready. You know where to push your stops up. All right. That's all I got. That's all I got. This is just a good way to, for a day trader to use. Here's a good setup for a day trader. All right. You got the week, you got the daily, you got the 4 hour, and you got the 1 hour. Okay. Good way to set that up. Just a suggestion, not saying you have to. All right. Not saying you have to. And then another reminder, you don't need green on the year, green on the quarter, green on the month, green on the week, green on the day, green on the 60 minute for it to be full time frame continuity. You don't need all of that. You just need green on the month, week, day, and 60. All right. That's just a reminder for you guys. I see also people making that a little bit too difficult. All right. It doesn't have to be green on the year, the quarter, the month, and, you know, so on, you know. Normally I would get into the chat and be like, what's new in the chat? What questions you guys got? But again, here's a good setup for a day trader. Me, I'm going to go back to this. All right, monthly, weekly, daily, and then my 60. Futures traders. I see a lot of futures traders use 4-hour bars. That's fine. I still suggest using that 1 hour to gauge what's happening. It's not so fast. You know, it's not a time frame that's whipsawing all over the place. All right. If you're using your 4-hour and your daily and your weekly to stay in that trade, I'm in this trade. All right. I'm not getting stopped out of this thing. That's fine. At least have that 1 hour bar up, that 1 hour candle up, so you can see, okay, is it starting to slow down? Is it about to reverse? Do I have some shooters setting up here? You know, or is it about to go the other way? You know, starting to consolidate. Got some inside bars. I got some hammers. We'll see if they go in force. It could be the time to get out of this put. All right. Oh man, this is the Strat Surgeon 4. Just a quick, idea on the 4 hour. If you're if you're a day trader, options trader, it makes sense. Futures trader makes sense, but for the average regular trader, that trading equities, trading stocks like myself, I'm not so concerned about that 4 hour. Okay. All right. So that's all I got, and let me know in the chat, in the comments, what you guys think. How do you guys use the 4 hour? How about that? All right. Let me know, and maybe I'll answer some questions on the next weekend shift. All right. I'll talk to you guys later. Peace.